Hello and welcome. You're with us here on Business Today. The financial world is a jungle of sorts, dangers lurking everywhere. So how can you foray into this jungle to feast on its bounties but stay clear of the traps? Adhil Shetty, co-founder and chief executive of bankbazaar.com, joining us today to take you on a journey through the financial wild, accompanied by the bee, the beetle and the money bug. So what do these creatures have to do with finance? Let's find out. Adhil, great to have you with us, and it's fantastic to see how you're looking to make finance much more interesting for those that are looking to discover the world of finance, the jungle as you call it. Talk to us first about the book, the journey, what drove you to put this together and what the main purpose behind it was.
Thanks, Aabha. Great to be here. At Bank Bazaar, I've been writing about personal finance for over a decade right now. And this book was made in order to give back and to help people who are thinking through various personal finance decisions in their life. What we did is we took 10 years of learning and tried to put it in an easy to understand format wherein, you might have a doubt today on fixed deposits. So there's a chapter on how you save. You might have a doubt on mutual funds. So there's a chapter on strengthen. And we just try to put out easy to read content with a lot of data driven examples, anecdotes that consumers have written to us at Bank Bazaar saying, I'm facing a problem, what do I do? And we're hoping that when people read it, right, they feel that they got some value in terms of decision making for whatever personal finance question they're facing, be it in terms of fixed deposits, be it in terms of mutual funds, be it in terms of life insurance, or any of the questions that come to us on a regular basis.
Okay. So let's talk about the five principles that you've described in the book, and I gather this is based on Maslow's principles, the pyramid approach. Share with us how that works, how people can apply it, and what the five principles are.
Right. So most of us are familiar with Maslow's pyramid, right? So essentially, in simple form, it says that first you take care of your food. Once that's done, you take care of your shelter. Once that's done, you go to higher and higher need. So people sometimes feel overwhelmed when it comes to personal finance, saying, hey, I'm confused about so many things. Do I focus on my insurance? Do I focus on my mutual fund? Do I focus on my home loan? So we took the Maslow pyramid and built a 5S Bank Bazaar pyramid. So the bottom layer, right, starts with the most basic thing you need to do, which is you need to save. So how do you set up an emergency fund? How do you choose a fixed deposit? Everything to do with the first level one, which is saving. The second layer goes to secure, right? So even before you invest, you have to secure, which is your term life insurance. What happens to you if you die or if you fall sick? The third layer, right, is saver, which is the no cost EMI on your credit card, the cashback you get, if you use a particular co-branded card. And then we go higher and higher into strengthen, which is your investments, and last serenity, which is your retirement and ensuring that you have a great life even after you stop working.
Okay. So really how to apply those principles when planning your personal finance strategy and approach. What are some of the questions that you regularly get, Adil, from customers? Do they find it a challenge to apply these principles? What are some of the anecdotes, you've come across over the last few years and that you've also included in the book?
Got it. So maybe let me use three anecdotes, right? So we had, a customer at Bank Bazaar write to us saying that, hey, fixed deposit rates are going up. Should I lock in my rates now? And I think this question had come to us when we were writing this book about 6 months ago. Now, what we said, right, is that when the repo rate goes up, the fixed deposit rates tend to go up, but they tend to go up with a 3-month lag. So what we suggested is try a system called laddering. So you put in some amount of money in a fixed deposit for a year. You put in some in for 6 months, some in for 3 months. And as and when the maturity comes in, you keep going in again, because when the rates keep going up, you don't want to lock once and for all for a 2-year period and not get the benefit of as the rates move up. So this was one of the issues we've addressed. The second thing is people often ask us saying, hey, there are so many mutual funds out there. Which mutual fund is right for me. Is it a small cap? Is it a mid cap? Is it an index fund? And here, right, we've done some very interesting research and quoted, what Morningstar has done. In 60% of cases, we find that an index fund globally has beaten a managed fund. So we're saying that if you're not an expert, you just need to go in on a Sensex or a Nifty fund. And in most cases, majority of cases, right, the index fund tends to do well. And we've then given the 1 year, 3 year, and 5 year return on the various index funds out there. Now, the interesting point to note, right, is we are not saying that you'll always make money on an index fund. In fact, the book covers a point that in 10% of the time in any 3 year window, the index fund is actually negative. I think, as we speak, the 1 year index might be negative. But what we're saying is in the rest of the time, you tend to do well as long as you have holding power. So that's what we said about the mutual fund. As far as home loan and credit score goes, what we've said is today everyone in India knows you have a credit score.
Yeah.
This is the most important thing that affects your eligibility for any financial product. Make sure you have a credit score above 750. Check it every month if required. And if you're on a home loan, right, you should be in this kind of environment, making sure that you're getting the best deal possible. And there's a lot of material in terms of when the rate goes up, how do you prepay in order to make sure that your loan tenor doesn't go up? So these are some of the interesting anecdotes we've responded to in the book.
Okay. Adil, like you said, you've been writing about personal finance and, have answered so many questions and queries on how to structure finances, how to manage money responsibly, and really make sense out of all of the confusing literature out there. What are some of the key tips that you've arrived on after all of this that you share with some of your readers through the book?
So the first understanding, right, is that when you actually break it down and look at it through this 5S pyramid, you basically understand at what level you're at and what question you need to deal with first. I find most people sometimes get overwhelmed trying to do everything together. So they're talking about their emergency fund not being sufficient. They're talking about, should I do a home loan? Is my insurance sufficient? So the first thing we felt is let's structure this in an easy to understand format and tell people in chapter one, focus on your saving, because before you do anything else, right, you need to have that emergency fund ready. And that emergency fund needs to be 3 to 6 months of your salary so it can take care if something goes wrong. The second thing, right, is personal finance can actually be demystified by applying a few simple principles. And those principles are out there, but in the book, we try to make it crystal clear. So people ask us a question saying, should I go in for a term life insurance, which gives me a high insurance cover if I die, but does not give me anything if I don't die within the window? So I have a term insurance plan. If I die before 70, my family makes or gets the significant payout, right? Let's say running into several crores. Or should I go into a cashback life insurance policy wherein the insurance cover is small, but I'll get money back at the end of the period? So again, here we've been clear. Our recommendation, right, is insurance is to secure yourself. It's like, and we've used the example of a beetle. The beetle has a very, very thick covering. And there are certain beetles which can withstand a car running over them because their shell is so tough. So we're saying the main aim of life insurance is if you die, your family needs to be okay. So always go in for a term life insurance and try your best to insure yourself up to 10x of your annual income. So if a breadwinner dies, the family at least knows that 10 times their salary is coming to me, which I can then use to plan my affairs out. So the important thing I think is firstly, understand where in the 5S pyramid you are. So maybe you've taken care of your fixed deposits, your savings. Maybe you're at the stage where you need to fix your secure, which is your life and your health insurance. Maybe your secure is also taken and you need to save a life, right? One very interesting thing that we cover in the book is if you're a smart user of a credit card, which is, I mean, you pay your credit card bill in full, there are people who accumulate sufficient reward points that they're able to take their summer vacation on those airline miles. All right. Today I'm in the market for a television because my old one has gone off the blink, right? I can pay the same price on Amazon that I pay on UPI, and I can get a 6-month no cost EMI on my bankbazaar Yes Bank FinBooster credit card. So we're trying to tell people that there are ways to save up if you use your money smartly. I think I already covered the point on strengthen. Strengthen was your home loan. We're telling people to watch out for refi because that's a hot topic right now. Another hot topic is the repo rate went up 2.25%. My loan tenor has gone up by 5 years. My loan EMI has gone up by 3,000 a month. What do I do? The one word answer is prepay. And lastly, right, which is serenity, which is your retirement planning and always ensuring that you have a high credit score, which is the main thing we tell people at Bank Bazaar.
Absolutely. And I think that's incredibly important as people plan their borrowing as well. You know, we've talked about saving, insurance, investing, borrowing, multiple aspects of taking charge of your personal finance. Adil, you've had so many, notable people talk about your book, from Nandan Nilekani, KV Kamath. Share with us, some of the feedback that you've received and what perhaps are the things and the qualities in the book that really stand out to them, things that appeal to consumers at large.
Yeah, so the book has been endorsed by Mr. KV Kamath. It's been endorsed by Nandan Nilekani. It's been endorsed by Monica Halan. And I think they've called it a easy to understand and read primer. We also have received endorsements in the book, right? From the senior editor at Jagran New Media, from the deputy editor at the Mint, and a lot of people, who are looking at personal finance on a day in and day out basis. I think what's also very heartening, Aabha, is the book is currently tagged as a bestseller on Amazon. And when you read the reviews, right, I think one review which really struck me was there was a housewife who was saying that, hey, I've taken my family through very, very hard times by saving in a tin box in my kitchen. And I wish I had read this book 20 years ago because it gives such simple tips in terms of what I need to do for each of the 5S layers in our personal finance planning. So what I'm hoping, right, and the true purpose of this book for us at Bank Bazaar, for me, for the team at Bank Bazaar, is if we can add just a little bit of value, to people's lives, wherein they feel that by reading at least one chapter in the book, it helped them think through one personal finance decision, right? And the reason I say this, right, and I know it's very easy to talk, it's much, much harder to have discipline in personal finance planning. But the opportunity, right, is these are big financial decisions which affect our happiness, right? So my wife, my child, my happiness, a lot of it depends upon how we manage our personal finance. If we can invest a little bit more time in this, it can make so much of a difference to our lives. And one very interesting thing, right, is the finance minister in our budget speech said that there needs to be a big push on financial literacy in India. Can we teach a subject like this, right, in high school? Can we teach a subject like this in university? The finance minister actually said that financial literacy is something that regulators should encourage. So people are aware of what they're doing with their money, because at the end of the day, there is so many different terms out there. There are so many jargons out there. But can we, in a simple format, give people the tools, just the basic tools? Now, who they put their money with, what they put their money to, they are the best judge. No one can tell them, what is the final answer. But can we at least give them a structure, which is the 5X pyramid? And can we give them simple tools to evaluate between A or B, right? If we can just give a little bit of that value, I think our mission or our purpose in putting out this book from Bank Bazaar side would have been solved.
Absolutely. Adil, we spoke a lot about the key principles behind personal finance. I also want to now get your views on a couple of trends that we're observing when it comes to how people are looking to manage their finances. Credit score, for instance, that's something that's become a lot more important in recent years. How should one take cognizance of this when looking to structure and looking to borrow?
This is something we get asked all the time at Bank Bazaar, Aabha. So today, if you see any ad from a bank, right, it says that if your credit score is over 750, you get a better rate. Or if your credit score is over 800, you get a 0.2% discount on your home loan. So this is something that matters not only to you today, but is going to track and follow you for the rest of your life. So the advice we're giving people, right, is that please be aware of what your credit score is. Whether you're at the stage of taking a two-wheeler, or you're taking a home loan, or you're thinking of a large business loan, every single time the number one determinant of the offer you're going to get is going to be your credit score. Keep it above 750. In fact, aspire to have 800. It starts with awareness. Check your credit score online, see what it is. There are a number of sites, including Bank Bazaar, which can provide this information to you. Two, right? There are ways and means to improve your credit score. Every time you pay your EMI on time, your credit score goes up. Every time you pay your credit card bill in full, your credit score goes up. So there are a lot of easy tools that one can use in terms of improving your credit score. So the takeaway here is this is not something that matters just right now. It's going to follow you for the rest of your life. Be above 750 if you can. In fact, aspire to above 800. And always know, like with any skill in life, right? It's not something that is static. If you behave and handle your credit the right way, it will go up. But if you make any mistake, right? If you miss a payment, if you miss an EMI, it will go down. Be aware of it, track it, and make sure it improves.
Okay, so in line with that as well, while talking about credit scores and home loans, we are all aware that the repo rate is rising. How is that going to impact the loan environment?
Yeah, so this has been the biggest gripe that home loan borrowers have. So what has happened, Abba, is since the repo rate this financial year has gone up 2.25%, people are paying a lot more in their home loan. They could be paying it in two different ways, and it's important to call this out. So one way they could be paying more, right, is the bank first tends to increase your tenor to whatever is maximum possible. So they typically tend to increase your tenor by about 5 years. So you're paying additional EMIs. So you might be paying 20, 30, 40, 50 additional EMIs because the repo rate went up 2.25%. You need to look into that. Secondly, right, if you can't increase the tenor, then your EMI goes up. Now, at the end of the day, there's only one way to fix this, Abba. The repo rate is not in our control. Will it go up once more? We don't know. Will it start going down in FY24? We don't know. But what we do know, right, is if you prepay 5% of your outstanding principal every year on a 20-year loan, your 20-year loan actually becomes a 12-year loan. So you're actually saving 8 years of loan EMIs, 8 years of loan EMIs on a 20-year loan, simply by paying 5% from your bonus every year of the principal outstanding. So the magic word there is prepay, prepay, prepay. If you can just take that word and take it as a learning that's coming out of the book. If you have excess money, this is a time to consider prepaying your home loan. A separate topic, I'm not going to cover it in detail in this answer, but look to see that you have the best deal in the market, which is the topic on refi, which is another topic we cover in the Bank Bazaar book.
Okay, great. The Bee, the Beetle, and the Money Bug. That's the book we're talking about. Now, credit cards. I want to switch track to credit cards as well, because we've seen how popular they've become, how aspirational, clearly, and both for banks and customers, there seems to be an incredible uptake when it comes to the credit card market. What's leading to that, Adil?
So the RBI data has shown that in the first half of this financial year, credit card spends actually went up 75% compared to the prior year. The number of cards issued was the highest last year in the last 5 years. I think three things are happening, Aabha. So one is it's an aspirational product. I think everyone wants to have a credit card that they are comfortable with because it doesn't expose their bank account. The second is I think credit card companies in India have innovated and learned from the mistakes that happened in other markets. I'll give you an example.
Okay.
So in the US, right, BNPL market really became big because when you're shopping on Amazon or on Peloton, you could pay in 3 installments with no interest or fee payment. What the credit card companies in India have done is they've built the same no-cost EMI onto their product. So, for example, we have a FinBooster credit card with Yes Bank and a SaveMax credit card with RBL Bank. Every month, right, there are 100 no-cost EMIs wherein you can shop for a Sony television, LG television, an IBM laptop, and you pay the same amount that you would pay via UPI, the exact rupee amount that you pay via UPI. But the credit card gives you a no-cost EMI where you can pay this back over 6, 9, or 12 months, and there's no interest charge and there's no processing fee. So I think credit card companies have innovated. Now, the third and the interesting thing about a credit card is when used well, and that means you pay your credit card bill on time in full, it can give you access to tremendous amount of benefits. So, for example, every time you fly, a lot of these credit cards give you free access to the lounge, right? So that's a great convenience.
Yeah.
There's an example given in this book where a very smart user, we might not all be able to go to his level, but a very smart user can make sure that a number of the plans you have, whether it's a summer vacation, whether it's the purchase of a television, a lot of it can be got via these special offers and rewards on credit card. Neat product. It obviously needs to be used very prudently. And we've seen a tremendous amount of offtake where every single bank partner we're talking to says that this is the year where credit card is really going to take off because consumers want it, they see the benefits, and we need to educate them in terms of using it prudently.
When we've all seen those lines when it comes to those airport lounges as well, they'll proof of concept clearly. Leave us with some of the key tips to take away from the book in particular. We start with the principles of personal finance, but to-dos, daily to-dos we can keep in mind when we walk away after reading the book and thinking about our finances on a day-to-day level.
Right. So I'll try and just distill, three pointers if this is all, one can take away from hearing this conversation. So the first, right, is that once you save, right, before you do anything else, before you, invest, before you go into the stock market, just get that term life insurance policy, especially if you're a breadwinner. And again, if you're a breadwinner, get health insurance cover for your family. This is the secure layer. After save, right, secure comes in. Don't leave yourself exposed to the vagaries of health or death because it can happen at any time. Remember to buy these two products. The second, right, I'm going to pick out from the strengthen layer, which is the fourth layer, from the top, number 2 layer in the pyramid, which is strengthen. Index mutual funds are very powerful products. If you're not able to decipher everything that's out there, the regulators created a very nice Sensex and Nifty fund, and all the fund houses offer it. All the fund houses offer a Sensex and a Nifty fund. Data shows that in 60% of cases globally, right, the index has beaten a managed fund. If you don't have time to choose, go with an index fund. I think these are the 2 pro tips I would like to leave people with. And if you're a home loan borrower, think about that prepayment to get your loan back in order.
Amazing, and I think that advice on the index funds is incredibly important and something that we've spoken about extensively today. Adhil, thank you so much for your time. All of this was so useful when planning personal finances, and really a wealth of knowledge, just the tip of which we've touched upon today in this conversation. We do hope you get a chance to enjoy reading that book. Adhil, thank you very much for your time, and we look forward to catching up with you again very soon.
Thanks, Aabha.
If you like the video, do like, comment, share and subscribe.